Good afternoon, everyone. Thank you so much for joining us today for our day 2 of our 2023 Global Megatrends webinar series. Some of you joined us yesterday for a deep dive into Latin America. We looked heavily at real-time payment development across the region, looking at PIX, looking at the expansion of real-time payments across Latin America, buy now, pay later, and a little bit about credit, really diving deep into the region. And today, I'm very excited to announce we're going to take all of that learning that we did in Latin America yesterday and expand it to the globe, looking at trends across Europe, Asia Pacific region, and the US. This is an exciting event for us because we have never quite done such an ambitious webinar before. Just to give you all a sense of what's to come, of course, it's difficult to capture trends for 3 huge regions in 1 hour session. So it is going to be quite high level. And our intention is to give all of you a taste and an overview of how the same trends that we looked at in Latin America are developing and impacting the rest of the world, and hopefully draw some really interesting parallels. So we welcome your questions. Please make sure to ask your questions in the Q&A icon at the bottom of the screen. We'll address them throughout the presentation and mostly at the end. And hopefully we'll have a really interesting and exciting session today. So moving right along, quick legal notice for you all, just take note of that very briefly, and we'll go right into our introductions. For those of you who don't know me, on the next slide, my name is, oh, I'm sorry. Let's go one more. I'm messing up my order here. Go ahead, one more, please. Thank you. So my name is Lindsay Lehr. I am the Managing Director of PCMI. Many of you know us as AMI, consulting group specialized in Latin America. And as I explained yesterday, in December, we took the ambitious leap of launching our global practice, okay, covering European region, as well as Africa, APAC, and North America. And actually, we've formed teams and established locations across the globe, covering more than 50 markets. And so this webinar is really the debut of our PCMI brand. I'm excited to bring 2 of our global team members to the webinar today. You know, what we're going to do is introduce both Fabio and Sandeep, get you guys, get to know them, these new personalities at AMI and at PCMI, and help really establish our global presence and introduce our network, all of you, to what's going on at the global level. So I first like to invite Fabio to introduce himself. Welcome, Fabio.
Hi, Lindsay and audience. Thank you so much for having me. It's really exciting to do this Europe session and get some Latin specialists and audience, you know, a little bit of taste of what's happening in the old continent. So I'm based in Spain. And my background is from banking. I've been working from around 10 years in banking and credit, and also lately in Latin America payment, and more recent in Europe, trying to get a good view of what's happening here as well, and connecting with the Latin.
Thank you, Fabio. Thank you so much. And I'm also really excited to introduce you all to Sandeep, our consultant and specialist focusing on India and APAC region. Welcome, Sandeep.
Thank you, Lindsay. Hello, everyone. Good afternoon to all my friends out there in the Americas. I'm Sandeep Bardia. I'm based out of New Delhi, India. And for the last 2 decades, I've been an Asia and India specialist covering transactions, private equity, M&A, venture capital, research, and country entry strategies for financial services from fintechs, payment services, and the entire ecosystem out here. And I am hoping that my knowledge and experience about the Indian market and the entire Asia Pacific in general will help you guys to get some insight about this exciting and one of the largest economies of the world. Thank you.
Fantastic. And I really have to thank and congratulate Sandeep. What time is it where you are, Sandeep?
Excuse me, sorry, I cannot hear.
What time is it where you are?
Oh, it's almost 11 p.m. here.
Okay, and remind us where you're dialing in from?
Sorry, I could not hear. Sorry, Lindsay.
What city are you based in?
Oh, I'm based out of New Delhi, the capital city of India, city of 30 million people.
Perfect. So, we're quickly realizing that the challenge to managing a global consulting team is managing time zones. So I really appreciate, Sandeep, you being here for your time today. And we're really looking forward to hearing from you. So welcome.
Thank you.
All right. So moving right ahead, what we'll do to start off is remind us of what are the key themes we'll be looking at today. Okay. The salient payment trends that are taking place across the globe from Latin America, and also all of the regions that we're looking at include the expansion of instant payments, okay? The development of open banking, which is in a huge variety of stages and maturity, and we'll actually look to some world leaders today in our presentation. Yesterday I mentioned how with downward pressure on fees within domestic environments, there's increasing investment flowing into cross-border and remittance payments for a multitude of use cases. And Sandeep especially is going to tell us about that and how that's evolving in India. The US market is also really exciting for this trend. And finally, alternative credit, which is really in a phase of experimentation. More alternative credit exposes the whole ecosystem to increasing credit risk, increasing inclusion, which comes with increasing credit risk, and which is currently inviting more regulation. So we're going to see how that's playing out as well. And throughout, we're going to try to make parallels to Latin America. I know most of you are joining us are from a Latin America context. And please feel free to ask even the most basic of questions. There's no silly question in this webinar. So we welcome all of your curiosities. Okay. And to start off, before we dive into our regions on the next slide, I'm going to open us up with just some very basic global context information, okay? And the first is about interest rates in the US. If we go to the next slide, we'll see how the global economy, especially very much Latin America, and to a larger extent, the global economy, very much depend on the US economy, what the US economy is doing, and what the Federal Reserve is doing. And I have to credit my partner, John Price, with this slide, who is foremost thought leader in macroeconomics in the US and the Americas. And we're all very curious and wondering what's going to happen with inflation around the world, and very much here in the US. This is top of mind for everyone. And it impacts not only people living in the US, but people living in emerging markets, because when interest rates go up in the US, capital, of course, flows to higher interest opportunities and out of emerging markets at times. And so this is, always these levers we're always wanting to pay attention to and understand how they're going to impact us. So we've experienced, high inflationary times with the Federal Reserve actively attempting to combat that by hiking interest rates over time. We do expect that this trend will increase until the middle of this year, with a tapering off towards the end of the year. The Federal Reserve has said their goal is to return the economy to 2% interest. A lot of speculation of whether that's possible or whether that will be successful, but we are expecting to come back to some semblance of stability and normalcy in 2023, which will help create stability in the Americas, and as well as other emerging regions. Okay. If we go to the next slide, of course, when we're looking at a global context, these regions are also different. And it's important to, at a base level, understand what GDP growth is doing, especially coming out of the turbulent couple of years that we've had, the volatility that we've experienced. What is the projection going forward? So looking at 2023, the world GDP projection from the EIU and the IMF is around 1.5%. And some think that this is underestimated, that it will inch up towards 1.8, 1.7%. The US is potentially dragging this down, potentially at zero growth, or maybe going into recession. This is still kind of speculative. But when and Latin America, very much on par with world level growth. But when we look to other regions, specifically Africa, China, and India, we see some spectacular growth projections and expectations. Much of it is related to innovation, financial inclusion, and more, millions of people coming into the digital economy than ever before. Sandeep will tell us a little bit more about that. Okay, going ahead. Moving into payments, right? It's helpful. We know that the evolution of real-time payment schemes is taking place all over the world. A lot of times in Latin America, we have these blinders on. We're only looking at Brazil, but Brazil, of course, is not the first country to innovate in this space. And actually, India is probably the global case for real-time payments, one of the first to begin, and certainly the most successful in terms of number of transactions. So here we just have, we can display the variety of schemes that we see across the world, with India leading by transactions. Brazil is actually ahead in volume, but when we're looking at actual number of transactions, India is far in the lead, followed by China, and very interestingly, Thailand is in the top 4. We'll learn a little bit more about that going forward. The US is coming in at number 5. When we combine private schemes like Zelle and Venmo, we still don't have a unified government pushed instant ACH platform. Nigeria, UK, we've heard a lot about. So Malaysia and Spain, which Fabio will tell us a little bit about what's going on in Spain. There's a lot going on in the world. And so it's great to see this all on one slide to be able to compare, and we'll deep dive into a couple of these schemes throughout the presentation. Okay, and just like we did yesterday, looking at success factors for PICs, we've also, those same things apply when we're looking at these schemes globally. But, zooming out a little bit more, these are the 6 kind of success factors that we've identified, thinking about, the rise of these schemes globally, because they're all very different. They all have different goals. They all have different user targets in the end, but with the goal of faster, more seamless, cheaper payments. And so similar to Brazil, big fintechs, banks, and big tech are really needed to participate all together in the design and implementation of the scheme for it to really take off. Regulators are driving and managing the solution during and after implementation. Now, this is not necessarily a required ingredient to be successful. We've seen the success of private closed loop platforms, but to really create this interoperable solution, we've seen it needs to be regulator driven. Only one unified brand pushed to the public to really generate cohesion, understanding of what it means, and drive that brand equity has been very important. A very useful tool in promoting scale is the disbursement of social benefits over these schemes. This was very prominent in PICs, in the PICs case in Brazil, and we've seen it true across the globe as well. Another driver is increasing investment to widen smartphone penetration, and of course 4G networks and even 5G, as we'll see in next coming years. And possibly one of the key ingredients to make these schemes really entrenched in the long term in the modern instant payment landscape is the ability to export the model and create integration with cross-border use cases and other markets. And that is taking place most actively in the APAC region, and we'll see examples of that. All right, so let's go right ahead. And I'm going to, we're going to start off looking at Europe. So I'll invite Fabio to come in and take us through key learnings for the Europe region.
Hi, Lindsay. Thank you so much for the intro. I will be trying to give a good overview of what's happening in Europe. Of course, remember Europe, there are so many countries, there are over 30 countries here when you see a number. So there are many differences across them. So I'll try to be very and pinpoint the main outliers, let's say. And give a good overview. So we're gonna be talking on the alternate payment methods and the instant payments in Europe, a little bit of the open banking, the UK case, which was the main, the first success in the world that is a reference, and the European support for that regulation. The cross-border remittance, what we see the trends for the region, and also what are the main players on the BNPL and what's been happening in the continent. So next. Okay, so next slide. Yes, there. So here is going to be is how people spend their money and at face-to-face transactions, POS in Europe. So when you think about Europe, it's developed. Everyone has mobile phones, and 9% of the population have a card, and still 66 out of 10 use cash for transactions. And this is like, wow, this is like if you come from Brazil, I never used money in my last 3 years there, and then when Europe, yes, you use it every day, mostly, especially in shops and bakeries, grocery shops, restaurant, pubs. Maybe when you go higher in the ticket, then you go card, like a supermarket, let's say. But the cash is pretty much part of the daily life. Is still, with one exception, only one you can see that I would say is like the Netherlands is the only exception that we see. That's 20%. It's cash, but apart from the Netherlands, most of the countries are used, like Germany, Spain, France, and UK. Cash still very much used. So although since 2019, from 72%, you can see in the slide here, to 59%, there was a bit of a great decline recently, but it's still very much important. And 60% of the population still thinks and believe that cash is a very important payment method. And so that's and then the wallets here are pretty much very 3% still residual, and cards are the main thing that they're growing recently, especially due to the contactless, surging. That 60% of the card transactions are contactless, and this is driving the change. Okay, so next slide. So on the online, cards are still the most used, but then across the countries, there is a bit of a difference. So maybe the Netherlands and Denmark and Germany, we have some low using cards, but apart from them, the others go, normally half of the online shopping is made by cards, and is decreasing, and we think still going to decrease continuously because of so many other solutions that are and being brought in innovative payment schemes, including wallets, PayPal, Paylib, Klarna, BNPL, and also most of these wallets, they use debit directly from their accounts and credit the merchant. So it's like intermediary to debit your account and credit the merchant. It's like a pass-through account mostly. And also the other that is growing, the other is growing is really much new payment methods, especially open banking, where the merchant directly debit the account of the consumer, either by direct debit, they were authorized for a longer period, or one-off debit. And this is making a lot of change, and this is the trend we see under the infrastructure of the European Union that is allowing this to take place. Okay, and again, just on an online trend, so which is very remarkable. It's a new thing as well. So from in 3 years, 6% of the non-recurring goods payments were online, only 6% in 2019, and now we are at 17%. And UK, France are the most mature markets, and Spain is the fastest growing recently. And next slide, please. So And here, just to give a good a bit of what's happening in Europe. So we are over 36 countries that have the SEPA scheme, which is the Single Euro Payments Area, since 2008. There was a standardized banking system, so everyone has the same. Every country has the same bank account standard, and this there was an evolution of that in 2017 when they implemented the instant SEPA. So any transaction can reach other country domestically or internationally within this zone, SEPA zone of 36 countries within 10 seconds, so instantly. And this rail is amazing, but only 14%, that's a really interesting fact, only 14% today is being done instantly compared to the normal transfers, which is within the day, normally hours or less than an hour, sometimes a bit more, but it's still not that much taking up. So by people and by companies, of course, open banking being growing, that might pick up quicker, but it's interesting to see and this low taken. One of the hypotheses we have is that first there are fee linked to that. Normally banks charge fee, and not all the banks are on the instant. Most of the banks, but not all of the banks. And also the lack of an instrument like a UPI, like a PIX, like a Pan-American, like say a Pan-European solution. Let's say they use this instant rail to make this payment in different channels and get really it's widespread in a way like PIX or UPI, other RTP schemes these are probably the most possible reasons for this low rate. So next slide, please. And this was a milestone. Not just the SEPA was a milestone for integrating so many countries under the same instant payment clearing system, but the PSD2, it's, let's say, someone says the cradle of open banking for the world. So which means the Payment Service Directive, PSD2, you hear a lot here in the payment industry in Europe. PSD2 was the basic, it was let's say also the principal pillar for the UK market to leverage their open banking and be the reference for many other countries to follow. So the PS2, it's basically the banks open the information for third parties via APIs, and this allows and some other security issues as well for transactions. These allow not just payments under the open banking scheme, like direct payments between merchants, for example, and consumers. But it really increases the playing field on the industry of innovation and payments. And the UK had the ability to introduce that law and mandated that to make it the standard, the APIs and the integration of how the information is shared must be standard. And there was a regulator-led, this very rich discussion in how they did it, and that's how Brazil followed their recipe, how to do it as well, how to get all the banks together, the players to design the best way of doing it and make it happen. What just happened in Europe that you don't see, it's a bit slowly taking place. So they are considering now doing the PSD3. Why? Because there are some gaps, important gaps to make Europe go quicker on the expansion of open banking and innovating, which is mainly the scope. So only for payment accounts. So to expand that to other verticals, such as wealth management, consumer lending, insurance. It wasn't in the scope. Also, the standardization of how to share the data wasn't done. And so this to make a pan-European, let's say, network of being everyone in the same standard, difficult to integrate it quicker. And for the third part provided, if you're acting, which is very normal in different countries, at the same time, every country integrated the laws at a different way or interpretation, a little bit different, which is also make it very difficult for the innovation to really boom, like you see in the UK, and now you're seeing in Brazil, that is a UK improved, let's say, with much more verticals, much more players, and much more reach towards open finance, not just a basic open banking environment. And see next slide, please. And so here's just a glimpse. So there is the rail, the SEPA instant work, so you can make a transfer in your phone to anyone within this 36 countries instantly through my bank app or a wallet under SEPA. But in the P2P cases, like just to illustrate, we don't have any solution like a digital euro, which is something that it's being considered by the European Central Bank. Probably by 2025, something can come out as such, European Digital Bank, European, but still, P2P, only 10% of the transactions were mobile payments versus 3% in 2019. The main leaders on that is Bizum in Spain, which has 22 million users. Is the most successful, let's say, instrument to do a P2P, on a daily basis, friends, lottery, things, and they're expanding to online and B2 and also for merchants and POS, and has a lot of potential to grow, but only to Spain, not like Europe. And this is something that the countries are solving themselves, and central bank in Spain was really the one to lead that to happen. So next slide, please. So on the cross-border, so as I mentioned before, within the SEPA area, 36 European countries, we have already the tools to do it, and with open banking and request to pay and other innovations, SEPA Direct, which is you can make payments throughout the region, it's growing and can get quicker with the SPD3 coming. Also the Eurobank, the digital euro, they're concluding the studies, as I mentioned before, and should come as a way of maybe being this new UPI of Europe in 2 years. And this is the big trend and the big thing. And outside Europe, the area, you have some banks that have their own rails, like Santander, like not rails, but their own solution, like close, like Santander Bank with Latin America. It's very used. Push card instant payments taking place. Some new partnerships being seen. MasterCard Send, Visa Direct in many countries, enabling many service remittance to especially Latin America. And also via wallets such as Wise, Revolut, PayPal, and also there is a work undergoing with Bank of International Settlements under a G20 mandate, G20 countries to make more efficient the SWIFT or international cross-border payments and transfers, which would be integrating Europe with other RTPs. So there are many countries like Singapore, India, and the Bank of Italy in the case of Europe doing the job to make this integration. Next slide, please. Studying the integration, let's say.
Fabio, sorry to interrupt you, but on this topic, I want to just jump in with some questions from the audience while we're on the topic before we get too lost in the other regions. And an interesting question here is, what are the benefits of a European bank not entering SEPA? Are there monetary interests?
Well, what's the question, sorry?
What are the benefits of a European bank not entering SEPA? Are there any monetary interests?
Well, SEPA is mandatory, entering SEPA. So it's mandatory. So there is no, you must be under SEPA, under the EU regulation.
Got it. Okay.
Yes.
Perfect. And another quick question. I was surprised to hear that cash usage went down in Germany. What changed in the last few years? Do you have an insight into that?
Well, cash use, it decreased in many of the countries. In Germany, I think the same way of, as happened elsewhere, with cards taking the lead. Cards are growing. Especially the contactless experience at the cash out, at the checkout. I think this is the main reason for this change in behavior. But it's still important, though. But the cards are taking.
It's fascinating that Germany is known as a cash heavy market, and it's interesting to see these differences. So
yes, it is. In P2P, I think is the highest in Europe. So in a P2P payment, it's 87%, I think, cash. So it's really interesting. And no cards online.
Thank you.
Yeah.
Go ahead and please continue.
Yeah. So, and the BNPL. So most of you guys are very familiar with Klarna. Where from Scandinavia, was born in Europe. Now they are launching they launched their bank. Though they're going through all these issues in profitability, and so they made a lot of acquisitions in Germany. They're very strong in Germany, with important players online that use to make payments. Debiting your account with bank transfer, intermediary, and also the BNPL. PayPal is very much used, especially and Afterpay in the UK, also very, very, very strong presence. And Alma is being really taking up some market in France. And also France is the only thing is not we are not used to installments in the European market like in the US maybe, but is not. You're not used. Everyone is used to pay, one installment. That's it. And the revolving credit is also not much, a thing. So people are very much used to debit cards or used to or pay by debit direct from or bank transfer. And so it was a very big thing for especially millennials, and that's where the success comes for is 3 to 4 installments, free of interest free like the other places. Mostly up to 90 days, and the credit risk is how people are getting to pay what their debts and affecting their credit score. This is being under scrutiny by authorities, especially in the UK and the EU too, and some regulations we expected to come this year probably. Regarding BNPL, and this should affect how this business model is being done. We understand that this can drive this business to very niche, very specialized credit scoring, specific segments of the retail industry to make a more healthy, let's say, credit assessment. But people really took it. And still the growth being at 20% estimated for the next 4 or 5 years annually, and we estimate that around 8 to 10% of total alternative payments used for the online is under BNPL in Europe, especially more in Germany, France, and UK. So that was the quickest overview of a little bit of Europe for you guys. Thank you, Lindsay. Back to you.
Thanks, Fabio. And what's interesting about Europe, we were talking about this at the beginning of the session, is that some of the more developed economies are a little slower to move forward in innovation, whereas in the APAC region, we're going to see how fast and aggressive and fast moving and a little bit crazy and fragmented the the market is, whereas Europe is very regulator-led, a lot of orientation around regional integration and regional cooperation. So it's nice to start to see how these regions are similar, but also different. So let's go ahead.
There's one thing. So just before you go, so financial inclusion, right? What means financial inclusion in India? Let's Sandeep will deep dive on this, and financial inclusion in Latin America, and financial inclusion in Europe is, well, keeping cash for the ones that like it, and going for digital for the ones that like it, and keeping it both. I think that's the strategy of the central bank, to make it inclusive. Cash is inclusive.
Yeah,
so it's
different. Cash is inclusive. Absolutely, it's a non-business centric approach, right? So it's just an interesting these nuances. Great. So let's go ahead. Moving into the APAC region, I'll hand it over to Sandeep.
Thank you, Lindsay. Thank you so much. So in this slide, we'll talk about the top highlights, and most of these discussions, as we have been hearing from Lindsay and Fabio as well, will be centered around instant payment. Now, we have to understand it's not just in India, but other markets across Asia as well, such as China, Thailand. Why instant payment, took a big leap, in countries where cash was a predominant factor. And you have to understand this fact that, see, Asia is already a very complex and a very different kind of continent. And with each country having their own unique culture, customs, infrastructure, and very, very different kind of, payment infrastructure and mindset and thought process of people. One common theme was that all these countries have a very, very strong smartphone penetration. And we are talking about smartphones as cheap as $50 that can handle instant payment at ease. And that's what drove instant payment in these countries. In India, which was predominantly a cash economy, now we are doing almost 4 billion merchant transactions a month, which is much, much higher than a credit card, debit card, or any kind of POS transaction, right? Similarly, super apps in China like WeChat and Alipay have huge, penetration in the market. We know that, my homeland or even China are huge in terms of population, but even with those significant population, the penetration was really noteworthy. And the effort of government, not just with regulation, but also with vested interest in making, these what we say channel to move the money so easily via UPI kind of systems was phenomenal, right? Now, another interesting that's happening in these countries is not just, payment within the country. Now we are seeing, India's UPI being adopted by other countries, not even in neighboring nations, but there are talks to integrate it with payments like SWIFT in US or even UAE, where India gets a lot of remittances. Even, Southeast Asian nations like Malaysia, Singapore, Thailand, they have been integrating their payment system as well. Apart from these, trends in instant payment, another thing that all of these countries have in common is a large unbanked, underserved, below the credit line population. These people are not credit worthy. They don't have bank accounts. They have lingual issues. There has to be a vernacular strategy to, tackle these kind of population. So what UPI kind of instant payment is doing is, creating an environment for open banking. For example, South Korea, huge, impact of open banking in these countries. India will probably see this kind of impact probably, in the next couple of years. But yes, all of these, countries are getting down there. Now, what it will do, why government is pushing this kind of, thing? Because they want to, as Fabio also talked about financial inclusion, they want to bring everyone under one system. In these countries where there's a lot of disparity, a lot of differences about who's getting access to what, these kinds of technology adoption are going at a very fast rate because government is making it free, virtually free. The government is pushing these systems with the help of fintech, which are getting a lot of venture capital and private equity funds, backing them to make customer acquisitions in these countries, right? Another thing, very, very interesting thing, which I'll talk in detail, is about cross-border remittances. All these countries have a huge immigrant and expat population overseas. All these countries have huge disposable income that is getting spent on overseas education, overseas purchases, and whatnot. People are traveling a lot. Even if we take out the COVID years, there's a pent up demand for everything overseas. So that's driving, India was already a 100 billion remittance economy, inbound remittance economy. Now there is an outbound purchase, not just for individuals, but from merchant side as well. So we'll talk about all these points in details. We'll just move to the next slide. Now, the star of Asia. I'll be going to India in detail, but apart from that, I like to highlight few key points and differences between India and China. I'm not sure how many of you have visited, these countries, but there are inherent differences in these countries. Even though they are close neighbors, there is a stark difference in terms of infrastructure, culture, mindset, and how money moves in between. China is a closed loop economy, a lot of regulations, they shield away from other people. There are super apps like Alipay and VPay and Telegram and all, WeChat and Telegram and all those things that have spent billions of dollars to acquire those customers. And now they are pushing all kind of payment thing, commerce and everything to them because they want to monetize that data, right? So this is a classic example of an economy like China that wants to shield away from everyone. Then there is another emerging economy like India, where they had a cash dominated population who was totally dependent on cash transaction. They had this cultural thing of holding cash and exchanging money. Now what happened over the years was, I don't know, not many of you will be known that there was a note ban to curb out black money or illegal money in India, right? When that happened and COVID happened and there was a huge penetration of cheap smartphone, the UPI was like a godsend opportunity. The National Payment Corporation of India created UPI, a small QR code based payment, which can be done with a simple transaction. It is backed by your bank account and the money reaches in 1 second. And most importantly, there is no fee. So what it did, two things. It made it convenient for people. It made people who are below the strata line to adopt these things. And most importantly, from a merchant perspective, they did not have to pay any MDR, any fee. So something that was free, convenient, super quick, it went like anything. Now, even if I talk about small numbers, the penetration of QR in Indian merchant universe. See, India has almost 65 million small and micro enterprises, right? And it's a country of 1.4 billion. So where you have 200 million users already, with all the banks doing this over $75 billion of transaction, out of which 4 billion are only merchant transaction. We are talking at this scale and this size that made UPI a grand success. And what was the most important reason? Convenience, no fee, easy, 10 to 12 times of installations versus a card swiping machine. So government did everything, fintech played their role, and people were quick to adopt, right? So as Lindsay was saying, this is not happening so fast in developed economies, but in emerging markets, India, where there is a high disposable income, there is a younger population which has the propensity to spend on things. So UPI was a really convenient opportunity. And of course, one of the biggest smartphone markets, India and China, they drove this trend. Even smaller countries like Thailand, where we don't expect such staggering figures, almost 80% penetration in terms of these instant payment. Small countries, not too educated as compared to India or China, but people are still driving instant payments. Almost all banks have to seize this opportunity. Almost all banks have to come on board. Now, particularly for India, now where it is heading. Now let's understand this. Banks are not making money. It is free. So what is the next step? Now, another important trend that is happening in India and which will soon be launched in the next 6 months is credit on UPI. So people will actually be able to use a credit card based line or credit from financial institution to spend on UPI. So that makes it double interesting for them. Interesting for people because they'll be able to do a higher transaction because it is not linked to their bank account, but to a credit card. So there is a play for players, card issuers like MasterCard and Visa. There is a play for banks also to earn an MDR because those transactions will not be free. So there will be an opportunity to monetize this huge data, which has already come on UPI via these other services. There will also be commerce integrated with it. Now, even if we do shopping here on Amazon or anything like that, we have UPI. Even a small thing like buying a vegetable at a roadside vendor, he will have an UPI. Now, all these people from a financial inclusion perspective, whom banks are not able to serve, whom, what we call as open banks or neo banks in India, they are not able to serve, can be connected via UPI. So it's like a network, that is a huge, internal rail or internal network that government has connected, to push other kind of transaction as well. Next slide, please. So what's happening with the POS market here? See, POS is a prevalent thing in any other country in the world. But what happened with UPI, what it made that, it eliminated the need to have a card swiping machine at first. Secondly, it eliminated the need to incur an MDR charge in India. No, now with UPI being 10 to 12 times, penetrated as compared to a card holder with over 65 million merchants in India, right? This tech has to go viral in other countries as well. Now UPI is being made international. Now UPI, the similar model, is being adopted by other countries also, right? They've asked Indian, the tech providers and fintech to roll out the same kind of solution in other markets as well. Now, the next step would be the competition to offer credit. So as I said, there is a card called RuPay credit card, which is just like the in-house, Visa MasterCard of India issued by banks that will start offering credit to these the people who will be spending at these merchants. So merchants will be able to acquire, their customer acquisition cost will significantly come down, once credit is introduced. So POS will be virtually eliminated from Indian scene. I'm sure, it can never go away completely, but yes, there will be a significant penetration of UPI based transaction included with NFC and other kind of innovation. Maybe, in the future, blockchain might be integrated with it to make it even more secure. But yes, the future is for, instant payment in India. Next slide, please. So these are an example of, integration cases of how country integration is happening. So the Southeast Asian nations, due to their geographical proximity, similar kind of culture, similar kind of payment infrastructure, they have already shown the way. Now, India, which is again itself is a huge, internal market itself, is now spreading its wing across other smaller nations, what we call as the South Asian region. So it comprises of India, Pakistan, Bangladesh, Sri Lanka, highly populated countries. Apart from India, all these countries are economically very, very poor. Their population is huge, but the success rate of, success of India and with the support from India, these solutions would be rapidly rolled out in other nations. Smaller countries like Nepal have actually already started to do that. Right now, with a lot of Indians, there is almost 20 million Indian expat population either working in UAE, another 10 million in North American countries. The government has to, offer those who want to send money back, those 100 billion every year back to India, via a solution like UPI. Traditionally, India, the remittance market was actually dependent on people like Western Union, who used to do the old way. High fees. It used to take like 4 or 5 days, lot of KYC and all. Now UPI is quick. You just, send to the unique ID and the money will hit in the next 10 seconds, and that too without fee. And, with such kind of things, the inbound market is definitely going to be revolutionized. Now, apart from this inbound payment, a lot of opportunity are coming in outbound payment. Why? As I said, there is a lot of population who's going abroad to study. So the fees have to be paid via these means. Banks are not the most convenient way of sending money outside India. There is a restriction on an amount, and Indian cannot send more than a certain amount overseas. So with all those formalities and with all those compliance regulations that one has to, really face, there is a starking need to create a seamless, outbound solution, just like UPI for B2B payments, for payments for other things. Indians and, even people in Asian countries, even if we take the case of China, Malaysia, Thailand, there is a lot of traveling happening. There is a lot of increasing awareness about, what you can do in overseas market. People are spending a lot. People are investing a lot. Despite all the regulations and all the restrictions that are in place, there's certainly a need, for companies like MasterCard and Visa, who are holding the rails, holding the card network, to revolutionize these kind of payments. Indians are spending a lot on technology overseas. They are buying, solutions from, for example, if I want to shop overseas, Now, there are a lot of problems, sending the money through a local payment provider. Now, with cross-border payments happening easily, many companies were vying for these waves. An Indian can spend money overseas, a Chinese can spend money overseas. Just as a note, people from these two countries, there is a great disparity, but people from these two countries are one of the most avid shoppers, for ranging from luxury to whatnot. They are one of the most well-traveled people who are traveling a lot on hotels and other use cases. So for such kind of use cases, integration is key, and there is a huge opportunity to capture this cross-border payments. Next slide, please. Open banking, very interesting thing in India. Now, what is happening with open banking? India has a population of 1.4 billion. Almost 80% of India is under poverty line. They are unbanked people. They are not credit worthy and not covered by any credit bureau. Now, what Indian government wants to do, they does not want to implement regulations. But what it is doing right now, just like what happened in South Korea, where there was a rapid, because the country was smaller, but still there was a rapid influx of open banking use cases. India has created few categories. One category specifically, what we call is an account aggregator. So an account aggregator sits between a traditional bank and financial services provider to do API integrations and share data to these fintech providers or financial services providers so that alternative banking services can reach those areas. Now, idea is to make these unbanked population credit worthy. The idea is to make them financially inclusive. The idea is to offer whole gamut of other financial services, to this unbanked population. Indian Bank particularly has come up with a category called neobanks. So these banks cannot function like a traditional bank unless they have a license, but they can act as a bridge between a physical bank and the people who are not able to avail these banking services. UPI is actually part of this open banking scheme only because a lot of data and customer acquisition has already happened on UPI. So it's just a matter of time that these people who are on UPI would be able to avail credit, would be able to make deposits in their bank account, would be able to do many other financial transactions that a traditional bank cannot do. The problem with traditional bank, legacy systems, their customer acquisition costs are very high. They are still made by their old systems and physical approach of doing business. So these neobank category, account aggregators and UPI are actually penetrating into the tier 3, tier 4, tier 5 towns of India. And this example will be prevalent in other countries like China and all as well, where, the population seems to be concentrated across, major cities and where, all kind of banking innovations are happening in urban areas only. So UPI kind of solution is actually help them reach those tier 2, 3, 4, 5 towns where there will be far more opportunities to monetize those data and offer these unique banking services. Next slide. So BNPL, a very interesting case across Asia. So see, these are young, all these economies are young economies. There is a higher disposable income. There is a propensity to spend. So in countries like Thailand or India, the younger populations, especially I would say in the age of 21, who have just started earning their first salary and up to the age of 30 people are the prime candidates for buy now, pay later. And what it is spending on, these are spent on from anything from consumer electronics to clothes to even, simple purchases that does not, involve even less than like $10 or $15 of thing, right? So BNPL market, there, if I talk about particular about India, there is a mindset. See, Indian people were averse to loans. We are not a debt return economy. But the concept of BNPL has evolved so much that Indians are not considering it as a loan, but as a means of convenience purchase. So normally BNPL in India is like a 2 to 3 installment thing with, the lenders, the merchant paying the lenders anywhere between 5% to 10% and with no cost to the actual consumer. So it is not only driving purchases, it is also once credit is extended over the UPI, it will lead to significant increase in commerce as well. Because with UPI being linked to credit, people will be able to make higher BNPL purchases. right? So BNPL gonna be huge. Regulations will come in, will be problematic for them because the government is still deciding on gray areas and, how to structure it. But in spite of all this, BNPL is slated to grow across all these countries, right? Blockchain, AI, and all those things will actually spur up demand, for BNPL solutions, and fintechs are doing a lot of things in India. They have learned from their own mistakes, right? But now the model is getting set. A lot of merchants are, accepting BNPL payment, and UPI will definitely, or any other instant payment solution will actually drive this area. Yeah. Next slide. Again, alternative credit system. So one of the things I would specifically like to talk about in alternative credit is a lot of people there is a huge unbanked population across Asia. Those, traditional credit services, be it Experian or TransUnion and all those who operate in different countries of Asian market are not able to cover. So there are interesting startups who are doing anything from psychometric testing, to social media analysis, to all the other things to offer alternative credit, right? Customer acquisition costs are key. Even if you take the case of Indonesia, where 98% of the population, even if it's the fourth most populated country globally, they're 98% without credit card. So BNPL comes like a handy solution, and BNPL combined with instant payment is, the only thing that is left in the whole ecosystem is how to take that credit call. So very interesting alternative credit schemes are coming and combining and pushing these payment mechanisms so that, this can really spur up in these countries. And a lot of merchants are also are seeing BNPL as an opportunity to actually push their sales. So they are not afraid of offering healthy APRs to lenders, to push this scheme basically. And especially BNPL is also very, very interesting for first time borrowers or new to credit who are actually not covered by traditional credit bureaus. So new to credit customers, younger millennial population who have a propensity to spend is actually driving BNPL across all Asian markets. Yeah. Next slide, please. Thank you so much. I hope my insights would have been useful for you, and I look forward to Q&A.
Thank you, Sandeep. Love the passion. You're clearly, very steeped in the Indian market, and there's so much going on there. I know in Latin America, we look to Brazil, 200 million people. It's the behemoth. India is a whole nother level. So it's fascinating to hear about what's going on there. And it also gives us perspective, right? I mean, in Latin America, we're used to saying that Latin America is an unbanked region with limited credit penetration of 20%. 20% of Latin Americans have a credit card. You look at Indonesia, only 2% of people there have a credit card. So it's fascinating to see the perspective changes. We're almost out of time, folks. I have one more short section to share with you, and hopefully you can stay on for another 10, 15 minutes so we can answer your questions. I'm going to speed through the US because we have a lot of questions on the APAC region. So real quickly, US is an interesting market because it's unlike some of what we've seen in other regions. It's not regulator-led. It is almost exclusively private market-led, and that has led to some fragmentation. On the one hand, some of the most innovative fintechs in the world played in open banking, being a really exciting fintech to watch. Visa and MasterCard having a lot of success with their money movement tools, Visa Direct and MasterCard Send, but a lot of fragmentation and a lot of patchy, kind of a patchwork type of solutions. Some things are very far behind and some things are very ahead. So let's go ahead to the next slide. Looking at instant payments, those of you based in the US or experienced here know instant payments really has not been consolidated or unified in any way. We have Venmo was kind of the first one on the scene. Zelle and Cash App, the more recent app, have been growing steadily over the past several years. Now we have 200 million people using these apps, and they're really very popular and very useful, but no interoperability, and they're kind of like moving towards specific use cases and specific user segments. If we go to the next slide, we'll see a little bit of volume and transactions, and we see the growth consistently. And we see how Zelle in particular came on the scene later than Venmo, but really shot up in transactions amount, right? Mostly these are bank transfers used very often for more high ticket bank transfer like transactions, whereas Venmo and Cash App are more P2P, smaller types of transactions. But nevertheless, growing really steadily. We can see that there's demand for peer-to-peer and even now P2M instant transfers. And we're only just now getting into a unified approach led by, we could like to say the government, but it's an odd private-public partnership. If we go ahead, we can see the FedNow project starting to be planned to be implemented this year in 2023. A project in which Federal Reserve banks are launching a 24/7 instant payment system planned for July of this year, incorporating over 120 banks and fintechs. And the idea here is that it will really help banks be and remain competitive in certain use cases, keeping your money in the financial institution and at the same time having access to fast, instant, and seamless transactions. Use cases like bill pay, payroll, a lot of payouts, and a lot of B2B use cases to support small businesses is the thinking behind FedNow payments. It's funny, however, there has been, from a US, living in the US perspective, there's been almost zero marketing about this. Nobody is talking about it in popular culture. Even me, who I'm immersed in the payments industry, I've heard about this very scarcely here and there, but it's not, Pix, when it was being rolled out, there was a lot of marketing, a lot of PR, a lot of anticipation. That's not the case so far. We'll see if that changes, but typical of US market, right? Government regulator-led initiatives are not making the buzz that private initiatives tend to make. Okay. And then just quickly, if we go ahead, moving into, looking at alternative credit and buy now, pay later. Unlike Latin America, Americans are not accustomed to installment payments being offered by the merchant. Consumers will rely on their revolving credit from their credit card at very high APRs, but getting access to installment payments has never really been part of our collective consciousness. So this is why Klarna, a firm Afterpay, not even now PayPal, have been really revolutionary, enabling credit for people who maybe don't want to use their credit card, maybe don't have a credit card, or are just looking for a better, faster, and more engaging user experience to break their payments into installments. You now see these brands everywhere. Almost on every online checkout page, you see one of these options, and we've seen a lot of traction. Now, regulators have taken note as customers are defaulting, they're seeing their credit scores deteriorate. Perhaps they weren't fully prepared to take on the debt that they took on. We're starting to see more regulation, particularly in New Mexico, where companies now have left that state due to new regulation trying to cap interest and control a little bit this industry. And that is certainly going to be occurring in more locations across the US and across the world. So, the sustainability of these companies has come under suspicion. Can they really, sustain, with increasing default rates? But certainly there's appetite and demand for this type of solution. Okay, so just to wrap up, I know that was a completely, whirlwind around the globe, a lot of information, but hopefully you were able to pick out some key similarities and differences and draw some insights from the presentation and parallels to Latin America. And if you go to the next slide, I just want to end with 4 key takeaways that we can understand that's happening across the globe. Okay, number 1, very clearly, the era of instant money transfers has arrived, and it's not going away. It's only going to accelerate and become more deeply entrenched. The question is, as Sandeep, I think, really showed us, is what's next? Okay, money, more investment moving into cross-border, more investment moving into credit being offered over money transfers, more questions and fintechs layering on top of instant payment infrastructure in order to create added value services and extract more value out of these low-cost schemes. That's what we can expect to accelerate over the next many years. Number 2 is that credit is what I like to call the new barometer for financial inclusion. In many locations around the world, access to a deposit account and a digital payment has been solved, right? We looked at the UPI example. Millions of people have access to this whereas they did not before. But credit is there are still huge gaps in access to credit and affordable financing. And so we'll see a lot of these schemes gravitating towards the next evolution of that is credit for monetization purposes, and because there's just huge opportunity to serve an underserved population. Number three, if we move on to number three, we can expect more regulation in all areas of the payments industry. I think central banks and regulators have seen what an important role they can play in the evolution and development of interoperable payment schemes. And so we're going to see that more and more, looking at regulating cross-border payments, at capping fees there, potentially capping interest rates, even interchange and swipe fees. Governments are taking an interest in guaranteeing access to low-cost payment systems. It's popular, it's populist, it makes your regulators very, very looked upon in a positive light by the population. It can be perceived as anti-business, but that's just going to push companies to look for new ways, new business models to remain profitable and monetize. Okay, and number four, I think it has really come out in this presentation that culture matters. Okay, more than investment, more than regulation, more than whatever new innovative fintechs are coming into the market. What matters most to how a country evolves is how people think and what they believe, because that essentially impacts how they behave and how they respond to new innovations, what ideas they come up with, how they execute them, how they regulate them. So, and that's part of the reason why we've been successful at AMI and PCMI, is that we value so much the local context. We get so deep into local specialized knowledge so that we can really understand and predict how populations are going to react to new regulation, new investments, new launches, and new innovations. And so I'm really so excited to have Sandeep and Fabio here, who are showcasing their local knowledge, and we'll continue building that team and bringing you guys very specialized local knowledge that'll help you understand these things at a really deep human level, which at the end of the day is what determines how people make decisions and how an entire economy evolves. Okay, so thank you guys for staying a few minutes over. Before we get through our Q&A, we have a couple of great questions in the chat. I want to launch a quick poll. Very quickly, I want to know, we're very interested in following up with you after this session. How do you want to interact with us? Was this content interesting to you? Do you want to have a consultation with me or Sandeep or Fabio? Do you have an idea for a project you'd like to do with us? Would you like to introduce us to someone on your team, perhaps managing APAC or EMEA region? Just take a few seconds to introduce that poll, to answer that poll, and we'll follow up accordingly after the session. Thank you, everyone. We'll give it just about 5 more seconds, make sure everyone had the chance to vote. Great, we can go ahead and close that. And I'll move ahead, and we have a few really interesting questions. I don't want to take up too much more of people's time today, but in the meantime, please take advantage of the opportunity to sign up for our coffee chats beginning on February 27th, where we're going to talk about a lot of these trends more in depth. So I'll let you guys see that QR code and sign up at your leisure. And while that's on the screen, I'm going to invite Sullivan, our PCMI analyst who led part of our webinar yesterday on Latin America, to help us with the Q&A. Thanks, Sullivan.
Hey, Lindsay. Thanks for the invite to be here again. We have a couple of questions regarding UPI and comparing the system with different instantaneous payment systems. But to start, I would like to ask Sandeep. We have a question from Kawe about the fees charged by UPI. If the fees was regulated by the government, and how are the fees for business?
So it's completely regulated by government. It's completely free right now for individuals as well as business. The government has clarified for now categorically that they will not be charging any fee. But I think the only way they can monetize this network is by introducing credit on UPI. So once credit card are loaded on UPI and the credit is offered, there will be MDRs just like credit card. But for payments, absolutely free, individuals or businesses.
Okay, thank you, Sandeep. And we have two questions comparing UPI, one of them with Pix and one of them with Cody. We mentioned yesterday a lot about Pix and a lot about Cody. But first of all, I can jump in if needed, but what are the main differences that you see between Pix and UPI?
I'm not much aware about Pix. I think Fabio can jump in because he will have a better understanding about Pix. But for UPI, I mean, simple thing, it's the acceptance and the ease and the no fee thing that makes UPI so popular in India. It's a convenience factor. Indians are price sensitive, so it's a price factor, right? And the fact that it can be driven by a smartphone, which is a huge penetration in India. I think those factors make it unique. But from a technical perspective, I think Fabio would be able to comment on this, right?
Hi.
And Sullivan, both of you guys can comment on that.
Maybe Sullivan. Yes, Sullivan can also share a lot.
I'm not very familiar about the technical specificities about UPI, but one thing that I know that is different from Pix, Pix has a unified database of keys, of aliases. So, and this is managed by the Central Bank in Brazil. It is the Directory of Identifiers, the JIC, how they call here. It is a big database managed by the Central Bank. And on the opposite side, UPI, I know that it is a decentralized technology. Each bank and each player manage their own database. There is no unified database for all the users.
There is no. It's an interoperable system. So as compared to a Pix, which is like a unified database, it's an interoperable system and arrangement, you know, by the various nationalized banks in the country. Yeah.
Mm-hmm. And one huge difference that you touched on with the fees is that, you know, UPI is mandated to be free, even for merchants. And I understand that's what's really helped it spread like wildfire among merchants for acceptance. And what you said was really fascinating, that this is most likely going to drive POS terminals out of business eventually. And in Brazil, the difference is that POS and cards were already deeply entrenched before Pix arrived. And so, you know, Pix is not Pix is not so advanced in taking away the business from cards yet. You know, we'll see how that evolves. But another thing we talked about, Sandeep, was that in Pix, because of the POS infrastructure in-store, Pix has been extremely successful in the e-commerce use case and is starting now to compete at the POS. But I guess it's a little bit the opposite way in India. Can you talk about the e-commerce UK, like the comparison between in-store and online with UPI?
So UPI is popular in India in both the e-commerce space as well as the in-store space. See, the installation of a traditional credit card swiping machine to UPI is 12 times. So for every 12 UPI-based QR code, there is only one card system in India. And even see, people are wary about using their credit cards online. So UPI is very, very flexible, very, very easy to use even for e-commerce transactions. So people like to make payments even for e-commerce transactions via UPI. Very, very simple.
Got it.
So
and Fabio, in Europe, you know, the scheme hasn't really been adopted for merchant payments yet, mostly for P2P and money sending, but not quite for when we look at the percentages, it's taking a very small share of purchases in the in-store experience.
Yes, in-store experience, like such as Pix or experience or the UPI, especially at store. You only have the greatest place is the Netherlands. They have and still only 10% of the total purchase is made by a mobile phone with a QR code. So one of the key differences again, cards is being predominant and contactless is a good experience. I think the same is happening in Brazil. So card is there, although it's not like economically speaking from the merchant perspective, Pix is much, let's say, cheaper. And so they are promoting discounts, at POS. If you pay by Pix, they're motivating people to do Pix, although it's a different experience. So they have some discount. And this is kind of driving a little bit change of behavior from people, right? And here there is no motivation from either side, I think, to change things. If I like cash is good because it keeps my privacy and I can control my budget. So it's very interesting. And some others say, no, I will never carry cash. Like, it's much more comfortable to be with my phone and just tap. So, which is like case of, half of the population here. So, and apart from Netherlands, I think and Portugal and Finland, the other countries are still very much not behind of something similar.
Got it.
Oh, perfect. And Sandeep, there is one question also about UPI fees, but this time regarding cross-border remittances. This is also free. How it works, the fees on the remittance?
Okay, so regulations have just been introduced. UPI has just been opened. The government has just announced that it will be opened for cross-border payments. I'm pretty sure that they will make it free for now, or at least at a much reasonable cost as compared to other providers like TransferWise, Zoom, Western Union, etc. No definite specifics on fees, etc. have been out yet because it is yet to be introduced. I think it will take a couple of months before we start seeing some regulations and all the implementation. Yeah.
Okay.
It is just this month's developing story. Yeah.
Okay. And there is a question from Ignacio about the 2016 Indian banknote demonetization, or starting to be a cashless society. How do you envision this on the long term? Like, do you think that this was a good regulation? It was worth it? How are the possible benefits and problems that India might face in the future?
Okay, so this is a politically sensitive question because this was actually done to curb black money in India. The economy size that is shown to the world, India has a much larger parallel economy, right? So the main purpose of demonetizing the 500, 1000 denomination notes in India was actually to curb black money, but it had its own pitfalls and advantages. From an advantages perspective, people got wary of keeping cash in their homes. They are of constant fear. Okay, if the money gets demonetized, what will happen? So the movement or transition to wallet based or UPI based payment was really quick. This was like a godsend opportunity from them. The majority of success that you see in adoption of UPI in India was actually triggered by demonetization, right? From the pitfalls are actually not related to payment or financial industry or relevant thing here, but it was just more related to what's happened in the overall the cash versus the white versus the parallel economy thing. So from a payment perspective, I think it did a lot of good because it prompted people to move to a more wallet or UPI based payment and eliminate cash from the system. And COVID was like the hammer, the hammer on the nail for this. COVID even further triggered this phenomena. So these two events actually in the last 4 or 5 years resulted in what we see in terms of UPI today.
Okay, thank you, Sandeep. Fabio, there is a question from Juan about buy now pay later solution. How do you see the buy now pay later penetration in countries that installments play a big role? Like in Latin America, we have this common sense about installments, but how do you envision buy now pay later in these countries?
Well, I think it's not just about the installments itself. Brazil have a very strong culture of installments. Chile has this amazing, strong also culture of installments. For buying a T-shirt in 10 installments in that store. I think that's also the credit scoring and the underbanked. Let's say I think and the unbanked. That's where the BNPL in place like Mexico or in further regions of even in Brazil, like if they're unbanked, they have no credit, and then BNPL, if there is installment culture plus underbanked people, and I think that's where BNPL kicks in. I think it's and with the culture is much easier to introduce than the not just the free of interest installments, but you have models that they can charge interest to the customer because they are used to have some kind of penalty to enter in credit because they need the credit to make the purchase. I think that's a great difference.
And I would like to add, yes, BNPL will always be successful on those countries, where there are a lot of new to credit customers that are not captured by, the traditional lending platforms, as well as they have an alternative credit scoring system. And that's what, countries like even India will evolve to. BNPL success will truly come in higher merchant acceptance. There are a lot of new to credit customers, who and people have the ability to alternatively, give a credit score. Otherwise, who will take responsibility of the recourse, or the collection?
Oh, perfect. Thank you, Sandeep. And we have a final question. And Lindsay, I would like to send this to you. An interesting question. Which tools do you think fintechs and financial institutions will use to know what people think and what they believe?
Yeah, that's a fascinating question. I really appreciate that question. I don't know that, probably the primary tool that companies have access to is social media. And unfortunately, social media tends to bring out the worst in us. And so companies who are leveraging those tools are probably getting the lowest vibration of humanity and potentially developing service and products based on that, which sometimes tends to be a very successful strategy. Social listening, the more open banking advances, the more access to data companies have. So social network is one source of information, but also just your purchase behavior, your consumption patterns. And the more companies are able to access what you're buying, when you're buying, how you're buying it, that really reflects your values. And so open banking and open finance, data sharing will really help advance that, as well as give people a better idea of how creditworthy you are based on your behaviors, which is all essentially tied to your internal belief system. So I don't know that many companies think that way, right? Tying back human behavior to an internal belief system. And the more they do that, probably the better they'll be able to create products and services that really hit people at a deeper level and resonate with people and ultimately be successful. So, that's just my speculation. I don't know if my colleagues here have any other ideas.
I think on top of that, just to add, in China, the credit scoring are very, there are many fintechs doing a lot of super apps with models for credit scoring with so many variables inside Crunchbase, big data, a lot of AI, and one of the aspects, for example, that are key, it's when they get the city bike, they are free if you return them on time, before going over the time of the bicycle. It's one of the variables they also take in consideration for a credit score, which is nothing to do with the, let's say, monetary, financially transaction. So this kind of very, we open banking and also media, social media, and all this, range of, the capability that now these coins can do. I think there is no limit for what can come, in innovation in this area, and who's going to get the most accurate and most, credit scoring effective in the industry.
And psychometric testing is one that is really coming up. So we should not forget that. And why are we not talking about Chat GPT? I think
that's a great question. It's an ongoing conversation that we're having internally.
Chat GPT once it evolves. Yeah.
Absolutely. So anyway, thank you so much, everyone. We went over time. We still have a great audience listening in, so I appreciate your time these past 2 days. Thank you to Fabio and Sandeep and the whole team for supporting these events. We look forward to following up with you all and continuing to having these great conversations. So thank you. Have a great rest of your week ahead, and we'll be in touch soon.